Identifying and understanding channels is an essential part of a comprehensive analysis to help you identify overbought and oversold zones and let you know the overall market trend. To identify this, traders will typically use the line tool to draw a line from two swing points parallel to each other with hopes that this identifies surplus and deficit areas that will act as reversal zones. But by manually doing this, traders often make mistakes and the levels are rarely accurate. However, there is a far easier way of doing this that not many know about. This tool automatically draws these channels for you. It will provide 6 different standard deviations with varying significance. It will identify a separate channel from a higher time frame. The channels will also update in real time with 0 input from the user. It will also provide a moving average to gauge the internal slope of candles and even identify high volatility bars that can be used for taking trades. The indicator we are talking about is the linear regression channel created by DGT, and today we are going to show you how to get it for free, how exactly to read the indicator, and we will also provide a strategy you can start using today to increase your earnings in the market. So let's get started. Let's first add the indicator to our chart. Click on the Indicators tab and search Linear Regression Channel, Curve, Slope. Click on this one by this user to add it to your chart. Ensure you are on a 30-minute time frame or lower. Once added, you'll notice the indicator immediately draws 2 channels for you. Let's quickly go into the settings by clicking this gear icon to adjust a few options. First, we can see that the channel stops at the current candle. We want to enable Extend Line to have it plot beyond the current candle, allowing us to see projections. Next, let's increase this option to the daily for the second channel to be plotted based on the daily time frame. Next, we want to enable True Colors. This will color the channels based on the slope. So here we can see we have a bullish channel and an internal bearish channel. If we continue down, we can see we have regression curve and regression bands. These can be enabled to provide an additional layer of confluence when trading mean reversion strategies. The regression curve can be adjusted by changing this value and can act as a trailing stop, while the bands can help further confirm the market is overextended. Next, we want to go down to ATR length, and we want to ensure this is enabled. This will detect candles that are significantly larger based on the ATR value. These candles can be a good indication of increased volatility and can be a good sign to enter the market. And finally, we want to disable volume spike threshold to remove the candle coloring. That's all we need to adjust for now. The indicator plots these 2 channels, each with 6 different sections varying in significance. If the channel is bullish and price is retracing to the SD3 level, this would indicate that the market is very oversold and you would expect a reversal back to the equilibrium, which is this middle line. However, aside from the slope, it can also be used to determine trend, as if we have a bullish channel and the price trend is maintaining above the equilibrium, this could indicate a bullish trend. You would not expect a reversal until price gets to the 3rd standard deviation, at which point we can use the internal channel for further confluence on reversals. For example, here we can see price has retraced into the upper 3rd standard deviation of a bearish channel, and if we look at the internal channel, we can see that it's a bullish channel. So we can wait for price to move into the upper overbought area of the internal channel and seek an entry back to the equilibrium of the daily channel. When taking these trades, you would always want to set your stops 1 deviation away from the current area of the daily channel. Another way of using this indicator would have you wait for both channels to be aligned, which most of the times will mean that price is maintaining above the daily channel's equilibrium. Wait for a lightning icon to be plotted on a candle below the equilibrium of the internal channel and execute, keeping stops 1 standard deviation away and targeting the upper deviations of the daily channel. When doing this method, while not necessary, it is a good idea to ensure that the entry candle for a bullish trade is bearish and the entry candle for a bearish trade is bullish. This will allow you to get a better risk to reward, typically above 1 to 1.5. Once you have executed a trade, you also have the option of using the regression curve as a way to trail your entries. Here is another example. Here we can see that both channels are bullish and we have a lightning icon plotting below the candle. We will execute with stops at the standard deviation and allow the trend to run. At this point where price is now maintaining above the regression curve, we can now use this as trailing stop, and in the event price starts closing against us, we can exit our positions, ensuring we secure some profits. Another method of using this indicator would have you go to an even lower time frame, such as a 15 or 5-minute time frame. Next, we would want to identify areas in the market where the channel lines intersect. These areas can act as important support and resistance areas. Here we have two lines that have intersect, so we're going to go ahead and mark that level. As price moves, the channels will change in real time, so be prepared to have your areas adjusted. Now as price approaches this level, we can see that we are getting some rejections from this zone. These levels can be used as important take profit or entry areas. Here is another example. Here we can see we have a sell setup based on price action analysis, and below this level, we have an area where the two channels intersect. Though my target is lower, I will keep this level in mind as price approaches. Now that price is in this area, we will move stops to break even to prepare for any unexpected fluctuations. Perfect. Next, we are going to share with you a strategy we have been testing that is showing great potential that you can start using today. This strategy will provide you with exact entry areas and a better trailing stop with additional confluences for trend detection. But before that, if you are enjoying the video, don't forget to like and subscribe to not miss out on future videos where we will be providing even more advanced strategies. And if you would like to try the #1 premium indicator on Tradingview by xauusd, you can use the link in the video description to gain access for 30 days risk-free. Your continued support truly helps the channel grow. Now, as promised, here is the strategy. First, ensure you're on a 30-minute time frame. Next, go into the settings of the indicator and let's disable the regression curve and change the time frame of the larger channel to the 4-hour time frame. Next, add the xauusd signals and overlays indicator to your chart. From the signals and overlays indicator, we will be using the contrarian mode with a long-term autopilot and enable the trend tracer, which will act as our trailing stop loss. The signals and overlays indicator has two signal mode. One which confirms reversal and the other is for confirming trend continuation. By keeping the indicator on autopilot, long-term mode, the algorithm will automatically adjust to find longer-term trades without us needing to make any further adjustments. Here is an example of a sell trade. First, we want to be trading in the direction of the long-term trend. You can easily identify this by looking at the color or slope of the channel. Next, we want the price to trade into the opposing third standard deviation of the channel. Then we want to wait for a sell signal. If when the signal appears you're outside of the third standard deviation, you can enable the stop loss and take profit feature in the signals and overlays indicator to get stop loss levels based on current volatility. Once we have an entry and stop loss is set, we will allow the trade to run while trailing the entry with the trend tracer. If this turns green for bullish, we will close our trade. Additionally, now that we have a reversal entry, we will also switch the signal mode to confirmation to add another layer of confidence in confirming the downtrend. If the downtrend is confirmed, we can move stops to break even. Here is a buy example. First, we want to ensure that the higher timeframe channel is bullish. Once confirmed, we need to wait for price to retrace into the third deviation of the channel. Now we can wait for a signal and set stops at the closest deviation or use the stop loss feature in the signals and overlays indicator. Now we can let the trade run while using the trend tracer as a trailing stop. We hope you enjoyed this video on this new regression channel indicator, allowing users to easily identify and trade channels. If you would like to try the signals and overlays indicator used in today's video, the link is in the description of this video, and that link will also provide you with access to the price action concepts, signals and overlays, and the oscillator matrix for 30 days risk-free. Stay safe in the markets, and we will see you again soon.